Have you noticed how gold prices are touching new highs lately? It is not just because of weddings in India or jewelry demand. Something much bigger is happening. Central banks across the world, especially China, are quietly buying tons of gold. But why? And what does it mean for all of us? For centuries, gold has been seen as a safe haven. Whenever the world gets messy due to wars, financial crisis, or even mistrust in currencies, people run to gold. But this time, it is not just individuals, it's countries. In fact, central banks are now buying gold at the fastest pace in over 50 years. And here is where it gets really interesting. China's central bank has been on the gold buying spree for 10 straight months. By August 2025, China's official gold holdings hit over 2,289 metric tons. And this is not some short-term move or one-off purchase. For the last 3 years, the People's Bank of China has been quietly but consistently stacking up gold, and that is not just a coincidence, it is a strategy. So the question is, why is China doing this? Well, think about it. China has always harbored this dream of becoming the world's next superpower. But to be a true superpower, you can't just have military strength or diplomatic influence. You also need economic firepower. And at the heart of that economic power lies the currency. Right now, the US dollar dominates the global trade and finance. If you want to buy oil, trade electronics, or settle international deals, chances are it is all happening in dollars. That means the US has a kind of control switch over the system, and China doesn't like being dependent on that switch. By buying gold, China is actually playing a very clever game, and this game has 3 layers to it. Let's start with the first one, which is diversification. See, right now most of China's reserves are in US dollars. That's risky. But if the dollar falls in value, or if Washington decides to use the dollar as a political weapon, China could lose big. So what is the smart move? Don't keep all your eggs in one basket. By adding gold, China is spreading out that risk just like an investor would, and here is the proof. As of 2025, China's official gold reserves make up about 7.6 of its total reserves. Now that may sound like a small percentage, but here is the catch. It is climbing steadily. In just the last 3 years, China gold pile has grown by more than 5%. Back in mid-2022, it had around 2,107 tons. Today, that number is closer to 2,288 tons. That is a serious jump in short span of time. So this is not just some casual move, it is a long-term strategy. And diversification is just the first step. The second layer of this game is something even more powerful, which is protection. In case of sanctions or financial pressure from the West, gold acts like a shield, because nobody can freeze your gold the way they can freeze your dollar accounts. And we have already seen that play out in real life. During the Russia-Ukraine war, the US froze nearly $300 billion of Russian assets. It's almost like being on the global stage with a stronger player twisting your arm to do what they say and pay the price. And no country wants to live with that kind of vulnerability, and that's why China is preparing. And it is not alone. Other emerging economies like India, South Africa, and even parts of Middle East are also looking for ways to shield themselves from the whims of the US policy. And finally, the third stage is about credibility. Credibility decides if other nations want to trade with you, invest in you, or hold your currency. Without it, even a superpower starts looking fragile. Look around. Trade wars, imposition of high tariff rates, and anti-immigration policies that push skilled workers out, all of this is creating a sense of mistrust. And it is not just rivals like China or Russia feeling it. Even the traditional US partners in Europe are starting to question whether the dollar is as reliable as it once was. When the global financial system starts to feel uncertain, countries look for something solid. and something beyond politics, and that is where the gold steps in. It acts like a neutral reserve asset, which is a hedge against not just inflation but against the unpredictability of the US policy itself. So when you hear that the gold prices are rising, remember it is not just about jewelry demand or inflation. It is a sign of shifting power in the world. Countries are stacking gold not for today's profit but for tomorrow's security, because in the end gold is more than a metal. It is a trust you can hold in your hand. And the big takeaway is this: as long as the mistrust in the US dollar keeps growing, central banks will keep running to gold. And every gram they buy quietly reshapes the balance of power in global economy. That's it in this video. If you like this video, please hit the like button and subscribe to the channel. Stay tuned for more content like this. Thank you so much for watching the video.